We're here today with Santisa, who is somebody who I found on Twitter. And I thought he had some interesting thoughts. I think he runs a market neutral fund, which is something that is new to the show. Never talked to somebody who runs a trading fund. And I was like very interested in a lot of what he said on Twitter. So yeah, feel free to introduce yourself. Maybe tell us any background you want to share, and then what you do now at Lucidity, right? That's what it's called, Lucidity?
Yeah, that's Lucidity, yeah. Thanks for having me. Big fan of the Gwart show, so it's very nice to be here. So I'm going to take it way back for a second. I got into crypto in 2015. It was more like the Bitcoin space back then. So I was just browsing the libertarian subreddit back in the day, and Bitcoin came up a lot. So it was a very natural transition from a libertarian ideology to Bitcoin, which I think it stands for self-sovereign wealth and decentralization, separating money from state, which I think still stands for today. Right. So I got into the Bitcoin space 2015. I was like fairly young back then, didn't have much money. So just bought with whatever I could find on some odd jobs here and there. Stayed interested in the crypto space. And in late 2017, I got a job. I actually don't know how I actually got it, but I got a job at a fintech company in Latin America. So I learned on the job. That went pretty well. And in 2020, the company was acquired, and I just traveled mostly and stayed up with the whole DeFi summer shenanigans, just doing market neutral. I really like market neutral and we'll get deeper into that later, but I really like market neutral in terms of risk-adjusted returns. I think that there's a lot of alpha to extract there if you set up the system properly.
Can you give us like a little bit of intro into like what Lucidity is? Also, do you guys take outside capital, or is it just like a prop shop?
We actually do non-custodial market neutral mostly. So we work with crypto companies and family offices, and we set up market neutral strategies. So we also do run a custodial fund, which is the one to which we publish the returns monthly. Of course, that's quite smaller, and it has like a much like a higher rate of transactions. So yield is much better there.
Got it. Yeah. So can you talk to us a little bit about like what market neutral strategies look like? And again, we talked about this before. You said, most of the time when you're sharing alpha, you don't gatekeep it, but like, what does this look like in practice? And maybe talk to us a little bit about what, DeFi products you're using and where you're trying to find, alpha to the extent that, you want to share.
Yeah, no, that's good. I don't gatekeep alpha because, alpha is very fluid. It can be one thing today. It will be a completely different thing the next one. So I don't really think that gatekeeping is that valuable. So in terms of market neutral, we actually do anything that can yield and where the book stays truly neutral. So basically, if UniChain incentives are on for one tick liquidity, and on our mandate, we can have USDC or USDT. We can just go to Uniswap on UniChain, track one tick liquidity. So our edge there, our alpha, we think is that we can stay on top of the pool and be constantly rebalancing to track it, right? And we can make good decisions and go to wherever USDC, USDT has the better rate. So we go over there and we think that's our alpha. We're not just exposed to market beta, like depositing on bigger protocols like Aave, Compound, Morpho, or whatever. Like Morpho pools are paying risk-free rates and just the tap, right? And there's no insurance. It's a rather new protocol. So I think it's not only market beta, it's very disadjusted market beta.
Yeah. But I'm curious, what level of sophistication does it take? I mean, obviously you run a fund, so I'm assuming you guys have a fairly sophisticated strategy, but what level of sophistication, for example, you're just talking about UniChain incentives, right? And like, it sounds like you're mainly trading USDC, USDT pairs. So, I mean, in theory, like stablecoins should be closer to this market neutral idea. What level, do you think, does this take a very high level trader, or is this something that, the average person could do?
Yeah, no, that's a very good question. I think that the strategies in themselves are incredibly easy. Like the whole crypto economic space is just econ 101. But I do think the sophistication comes from understanding the risk stack, right? What risk are you undertaking? Am I fairly compensating for this risk? And then where we think we drive most of our sophistication is on an alerting system, right? So we have a bunch of alerts for TVL changes from smart money, pulling money in or out, and Tornado Cash funded address interacting with the protocols. So we think the sophistication comes from there, because if you go to sleep and the bridge gets hacked, you're going to be the last one out. right? So
Yeah.
there's actually a funny story when in 21 we're actually farming on Harmony 1, Harmony chain. I don't know if
I
that
know.
chain is still going on, and they
It's
got
like
hacked. I
Oasis or
think it
whatever.
was no, not Oasis.
I
I
know the
don't
one you're
really
talking
know.
about,
It
like
was
the massive, like it was a massive hack, right? Like Harmony was one of the biggest
I
first
think it was
hacking.
like 300 million. Yeah. So
Yeah.
I was like watching a movie and my phone blew up. Right, there's been a huge TBL chain in the chain, and I was like, okay, I gotta go check this stuff out, and it was basically drained. But the third party breaches, which were not the canonical ones, were still processing transactions. Right, they were still processing withdrawals. Of course, there was a slippage because we were like, I think it was like 9 minutes too late to the news, like from news to computer. So we got out. I think it was like 30 basis down from peg, but that was pretty good considering it actually went to like 2 cents, right? So I think that the strategy was incredibly. It has very little sophistication. It was just providing liquidity, USDC, USDT, but in the sense of setting up monitoring and actually being on top of it, that's the tricky part, and that's what makes or break a market neutral strategy, right? Your number one priority should be to not get wrecked and not to max extract yield.
Yeah, that makes sense. So just, you've mainly mentioned stablecoins. Is that primarily what you guys work with?
Yes, we do work with ETH, but our key business is stablecoins.
When you say you work with ETH, like, does that mean you're taking somewhat of a directional bet, or is that again like you're hedged somewhere else? I'm just curious because it sounds like, if you're supplying AMM pools with USDC, USDT pairs, right? Like that should be that's what I think of when I think of market neutral, right? Maybe if I think delta neutral, I may think like long, and then you're short on the other side with non-stable assets. But again, I'm not a trader, so I'm trying to get your understanding. But so, like, what would you, when you say like maybe sometimes you work with ETH, what would that look like?
Yeah, when we work with ETH, we actually just treat it as another asset. A stablecoin for us is just another asset in which we get yield, right? So we stay market neutral in the sense that yes, our book doesn't change with volatility compared to the base asset, but we just look at yield opportunities with ETH as base. It can be, staked ETH in that's like the risk-free rate, or it can be a lot more sophisticated, or it can be a bit riskier on the curve, right? So what we actually do at Lucidity is we cater to each of our clients' risk appetite. We might have a client that says, "Yo, I'm just looking for the risk-free rate and just a bit," or I'm looking to be aggressive on our strategies. I don't mind going to these newer stable coins, which aren't really stable coins. It's just like LP shares in a fund or whatever. So we're okay working around that. Of course, I do have my personal opinions on what the optimal stablecoin market neutral portfolio looks like, and that's why I post a bunch on Twitter. And I do tell my clients about this, but it's up to them, essentially, right?
Yeah. And when you say risk-free rate plus a little bit, does DeFi, do you think, in its current form, compensate for this? Because this is a bit of a loaded question from mine, because at this point, right, like I was talking to you before, during DeFi summer, and then shortly thereafter, we're all degenning really hard. And now, from my perspective, a lot of this stuff the yields are fairly compressed, and it seems like you need to be full-time like yourself doing this professionally. And even then, I don't know, it would kind of concern me, right? To put a massive amount of stables for, I don't know, 2 or 3 percentage points above risk-free rate. It's like, it's not so compelling to me, right? But I can definitely see if you guys, have a much more, structured risk sort of strategy, like that makes sense. But I am curious, like, what does that look like? Is DeFi at this point kind of safe enough that you feel good about offering clients, a little bit above something like the risk-free rate?
Yeah, that's a very good question. So in general, in down markets, I think that risk in DeFi get incredibly disadjusted. You're underwriting like a bunch of risks to get like 3% on average, right? Like, so below risk-free rate for a huge stack of risks that you're underwriting. So I wouldn't recommend anyone to just set and forget stables on DeFi. Yeah. I think that's a very poor strategy. That's not at all what we do. Not at all. I mean, if market conditions compress hard enough, we will actually take the money out of crypto directly, right? So go and buy T-bills, not even on-chain T-bills, because those are prone to failure as well. So just use Aave. Yeah, it's a very nice slogan, but you need to be on top of that stuff, right? And if you need to check the rates every 3 months to see if it's still adjusted to the risk that you're underwriting. It's not a very good passive strategy, I think. I think that the key reason why we do market neutral and we like our product is because we are very on top of it. Like we do transactions every day just to shuffle positions and we are very on top of stuff. But yeah, the passive investor in DeFi has a very hard time getting risk-adjusted return for sure.
Yeah. Okay, I wanted to go back to UniChain for a second. UniChain just launched, and they launched with a pretty big incentive program. It looks like, right? They got a ton of TVL, right? It was very slow at first, and then they just injected a massive incentive program. What you talked about USDC, USDT pairs? What do you think of this incentive program? Like maybe thoughts on just UniChain in general? Like you just run with it.
Yeah, definitely. So I think UniChain is a very contentious topic, right? Because it's not really clear how it's owned by the DAO. So it was developed by labs and funded by the Uniswap Foundation with a grant from the DAO, but they are actually only giving max 65% of profits if there ever are profits. But the DAO is funding the whole operation, right? So that's pretty weird in that sense. I don't really understand how value accrues to the token. And I've been very public about this on Twitter, just trying to collect people's opinions and reading up the forum. Nobody's talking about this. I'm assuming there's some backroom dealings, but there's no really way to know. So yeah, I do think that it's a bad business for uni holders. I don't think they're even going to see any return on that investment. But I actually tweeted just before getting into the podcast something that I thought was interesting, that if they're issuing a lot of uni, right, they might think that the valuation of uni is overvalued, right? Like it's very high. That's why they're spending money in a suboptimal way, because let's just make the most of the high valuation. So they're spending $46 million in this incentive program. There's no clear ROI. It's great for farmers, right? Because the risk stack of UniChain is incredibly low. Like B4 is heavily audited. Like you had native USDC, you have native USDT. So yeah, I'm very happy for UniChain from my fans' perspective. I'm very vocal in this. I'm very vocal against the incentives because I think it's not in the best interest of uni holders, and I think it's very weird because it got a very big quorum. A lot of people voted for, but they don't really have skin in the game. So it really poses a very interesting question for our token holders actually protected, and our delegates actually looking out for their best interest.
When you guys are farming UniChain, for example, and you're earning uni tokens, are you just instantly dumping those?
Yes.
Yeah. Thank you for your honesty. Yeah, that was what I assumed, right? Can people do this in size, right? Like I don't know how big Lucidity is. You don't have to go into too much. It also sounds like you kind of depending on the client, right? Somebody may be willing to take a risk like that, and so you kind of cater to that. But I'm curious, like, is this something that can be farmed in size? And if so, like, what does the competition look like in that? Does it just the yields get compressed? I mean, it sounds like you're making a lot of money right now, right? And dumping the token, so that's promising. But like, what does this look like from a farm's perspective?
Yeah, I mean, UniChain is actually a very rare event in the sense that incentives are crazy high, and it was crazy high during the first 14 days. If you actually look at the Merkle leaderboard, you can see that people are farming with 30, 40, $50 million, right, on USDC, USDT, and even bigger amounts on ETH, USDT. So it's not that common to have these crazy returns on such big amounts of capital. There are, of course, scenarios and situations in which it happens. Morpho back in the day was a good example of, just high yields across the board, or when Athena launched and they were paying I think it was like 75%. And that's just raised up rates across the DeFi board, right? So yeah, UniChain, it can definitely be farmed in size. Competition is not as sophisticated as I would expect, right? So I was mentioning that we're tracking the 1 tick liquidity, and big accounts that maybe had like a wallet that has $200 million take 2, 3, 4 hours to rebalance, right? So in that sense, it's not sophisticated as to be bodied yet. So I do think that a crypto enthusiast can get a lot of edge and get very high returns. I posted it the other day, but in April we got like 21.3 APY with almost negligible risk, right? So I think it can be farming size. I expect it to decay, of course, but these kind of situations do arise from time to time. And I think it's a good manager's duty to be on top of it and to lose sleep whenever the opportunities arise, because then you'll be stuck with risk-free rate for like a couple months and you need to average it out.
Yeah, it's really interesting. You're talking about these massive accounts, 40, 50 million farming UniChain. Do you think that is, I don't know, you can go either way with this question, but do you think that's sort of a testament? You were talking about it's extremely well audited, right? But is that kind of a testament to some maturation of DeFi in the sense that people are willing to bridge 40, $50 million over to, what is an L2 effectively? And then kind of tagging off that, what would be an example of something where you're not putting, you or other large farmers are not putting massive amounts, right? Like what if you looked at before and been like, there's 0% chance I'm, about to stick a large amount of capital on a chain like this?
Yeah, no, that's a good question. I do think that DeFi in general has gotten way safer. Like over the span of the few years, hacks have gone down, except when teams have a lot of negligence, right? Like compromised private key or, all the private keys running on the same servers, like on the running case. So I do think that DeFi is crazy safe. UniChain is on the OP stack, which is crazy battle tested. It's stage 1. So, Uniswap Labs couldn't really steal your funds that easily, at least. So it's fairly decentralized. It's fairly safe. Uniswap before is heavily tested. Their smart contract development practices are just insanely good right now. So I do think that the risk assessment has gone from analyzing smart contract risk to analyzing, economics and, just operational security that exceeds smart contract risk. So I do think that's pretty cool. I do better analyzing the other stuff than smart contract. On smart contracts, I mainly rely on audits and Lindy. So I'm very happy with that. On the side of where I wouldn't put money or where do I think that people generally won't put money, that's a very good question. So if rates are high, people will put money anywhere, right? So like an investment fund, like completely opaque and closed, can rack like 7 billion in a span of a couple months. No questions asked. So I think that's the funny thing about DeFi, and I think that's the key of my job and of our alpha. We don't get carried away by yields, right? So in early 22, I was actually running the market neutral fund, and a couple of LPs came to me and were like, you're yielding 15%, and my son is yielding like 19% on Terra, on USD, right? And it was like, yeah, I know people don't really care about risk. They only look at returns. So I do think that having the cold head to actually analyze the stack and just checking risk-adjusted returns is our key alpha.
Yeah. You said you rely on audits. Do you write code or can you read code? I mean, and how into the weeds are you in terms of strategies or whatever? Like how much are you digging into the code to the extent that it's, open source available? Are you looking in the intricacies, or are you generally relying on, auditing firms? And like, for example, with UniChain, I mean, I don't know that they would like me to say this, but I have a feeling that if some amount, I don't know how much, but if some amount was rugged somehow on UniChain, like I think Uniswap would be able to fill the gap. So there is some, I mean, I'm speaking broadly there. There is some, some of these protocols have a lot of money, and I think something like Uniswap could fill a hole. Now, I don't want to like say how big that hole could be, but I am curious in terms of like looking at, code and how much that goes into your risk sort of strategy.
Sorry, do you say fill a hole in the sense of halting the chain and
refunding users? Like I'm saying that a brand like Uniswap, if something went really awry, and you said, OP stacks battle tested, it's, stage 1. So like these are all good, right, for users and for larger amounts of money like yourself. But I'm saying that there are some protocols that at this point have a lendiness and have enough money that I think they could probably cover a pretty big loss. Aave, Uniswap, like these have massive VC investments behind them. I think they would figure it out. But I'm just saying that, right? That kind of goes against like the DeFi, like, oh, it's gone. But I'm saying like, I think they might actually, but you don't want to tell users that, right? Like that's not the mentality users should have when looking at this stuff, because that's how you get instantly rugged. But I'm just curious, how much like maybe digging into code, or is that kind of again something that you rely on the smart people who do sort of write this stuff?
Yeah, no, that's good. So actually, I do think that people already expect projects to just dilute themselves in order to fill any hole.
Yeah,
Generally, that's like standard practice. And if you don't do it, you're scamming your users. But MakerDAO or Aave, for example, they do have junior capital on the system, so it's actually written in the documentation and not in the code yet. But I know that Aave will put it in the code with the umbrella upgrade. I don't know if it's live yet, but they actually put money in to cover any losses that might arise. Right? I think MakerDAO has like 100 mil and Aave has like 110, something like that. Which I think is crazy, because if you look at Morph, for example, of course, risk curators are not putting any money as junior capital. This shit is incredibly risky, right? So there's not a business model in which insuring DeFi capital makes sense. I think that Maker and Aave is more like inertia, right? So we got this money, let's just insure the protocol with it. But that, of course, goes into the evaluation. Maker and Aave, I think they're covering like 1% of the supply, but then it begs the question, right? How much is a protocol worth if it's hacked, right?
I think there are some examples. I mean, Euler, had a massive hack. I think it was all recovered, but it's done. I'm not so in the weeds with this, right? But from what I can tell, has really made a comeback in a sense. It's kind of interesting to me because when I saw that Euler hack, how long ago was that? Like maybe 3 years ago. That was gargantuan. That was an obscene amount of money, and they got it back, and now they seem to be doing quite well. So I guess that's encouraging. I guess from the perspective of users and just looking at DeFi in general. Like there's ways to kind of come back from this stuff. But yeah, like you said with these other examples, they give out a bunch of tokens and then it's diluted, and they weren't really accruing much value to begin with. And so it's kind of like a death spiral.
The Gwart Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers.
I wanted to ask, did you ever supply stablecoin liquidity on, for example, main chain Uniswap? And I'm kind of curious if you think there's any value in USDC, USDT pairs without massive incentives, right? Because obviously you get into these discussions about impermanent loss and do AMs actually work? Have you had experience with that? And is there any value in doing that type of thing anymore?
Yeah, I've had experience with it, especially when B3 launched. There was a lot of volume and it actually allowed people to provide on very tight liquidities. Yield was okay. I think we got like 9 to 10%, but there were other opportunities that were yielding a lot better. Risk on Uniswap is incredibly low. Like if you go to Nexus Mutual and see the insurance rate for Uniswap is very low. But I do think it's very competed and there's like just-in-time liquidity bots and it's incredibly sophisticated space, right? So like mainnet, it's incredibly competed. I have no place there, right? I wouldn't play tennis with Djokovic. I wouldn't provide USDC, USDT on Uniswap mainnet.
Yeah, that makes sense. Okay, I want to shift a little bit now, and I'll allude to something we talked about earlier. I said, I assume you're just instantly dumping these incentives. Are you bullish on, right? You run market neutral. Another reason why I thought it'd be really fascinating to bring you on, because I've been in a lot of screeching arguments with people recently about tokens and token valuations and this type of stuff. Are you ever bullish on, maybe I'll just ask directly, are you bullish on any tokens? Do you guys ever make, long-term directional bets on some of these protocols, or does this stuff not interest you?
No, we do not.
Yeah.
So
Okay, go
to dig
on.
even deeper in the point,
Yeah.
To dig even deeper, actually, in my previous company, we actually did run a liquid fund. So we ran a liquid fund from, I think it was like mid 21 to mid 24, something like that.
Okay.
So we did outperform Bitcoin in the first steps, net of fees, right? So in June 24, I actually came to the conclusion, okay, this is a Bitcoin market where we don't have any alpha on the liquid space. We're just buying beta and it's trash beta, right? Because the odds are skewed against you. So that was great for making money because it was really a Bitcoin market, but it's not really the basis to run a liquid fund. Yeah.
Yeah.
So I actually just stayed with market neutral. So that's a long way of saying, no, we don't have any interest in, and we don't see any interest in the foreseeable future.
Okay. I feel like we're going to agree very much on this, but I yell too much about this stuff, right? So I need to hear from other people. Why are you not bullish on these tokens, right? I have my reasons. You can see me tweeting and getting into arguments with people. Why are you not bullish on DeFi tokens in the foreseeable future?
Well, I do think that DeFi tokens generally have a lot of insider selling, and that's like the key reason. They just track the general market, and a lot of the valuation, I think that I don't want to, well, maybe 80%, 70% are just speculative premium, and not on the underlying project, just on the token, right? So it's token premium. As long as the product is okay, it's relatively okay, the token will keep trading and maybe go up, go down, depending on what BTC does, right? So you're just actually buying BTC beta, but you also have the supply overhang of insiders, VCs, teams, and whatever, and you also have execution risk, right? So if you got Euler back in the day and then you got hacked, okay, you're now down 40%, 50% or whatever. And if BTC crash, you also crash. You only go up if BTC goes up. So I think that the line is not very clear of when a token goes up, if the project goes up, because there are no clear revenue streams, right? So you hold Uni is doing like $2-3 billion in UniChain or whatever. Where's the value in that for Uni, right? Yeah, you get mentioned on Twitter. People pick up your token. They start buying it because they want to speculate. So I think it's a very difficult market to, for a token to keep going up, essentially.
Yeah. Do you think it changes anytime soon? I mean, I guess this is the claim that we're converging on fundamentals, and it's like quite fascinating. I talked to this guy, Felipe. He runs a liquid fund. I think he's incredibly smart. I think I'm not such. I have some TradFi background, but not a whole lot. I never really had real job. So, but most of what I hear from him in terms of his investment acumen, I think he's spot on. Like, I think he really understands investing. I just think he's like kind of early. I'm going to have his partner on soon. So it's not like I'm talking shit right now, right? But I just think that for me, when I see these tokens, there's just what you said, right? Insider selling. It's very unclear that the fundamentals are attached to the project, and oftentimes, the valuations on the tokens it's like pure speculative premium, right? So I'm curious, like, is there any chance that this changes soon? It doesn't really matter for your fund, but like, where are we headed in terms of like these starting to resemble equities? And then we can talk about, okay, is this valuation reasonable or not?
Yeah, I listened to that podcast with Felipe. It was very interesting. I do agree he's a bit early. I do think that crypto is ruled and will keep being ruled by just speculative premium because there's no clear way for tokens to accrue value. I think he mentioned like he invested in Banana Gun and that went very, very well, but he bought like equity, right? I don't think that's... Yeah, he bought equity, and equity is a great investment, and I'm sure Uniswap Labs investors are doing great. They're getting a good paycheck. So I do think that it will continue because VCs are still funding this kind of stuff, and investors are looking for speculative premium. But essentially, I don't think we've cracked yet how to accrue value on decentralized protocols, right? Yeah, we do know how to make a company that makes money. You can see Uniswap Labs, Banana Gun, or there are a bunch of other examples. But on a decentralized scale, it's very hard. There's no real moat if it can be forked or replicated, or if there's a bunch of competing chains. So if you look at Morpho, I really like Morpho. I think it's a right step in the sense of infrastructure, just plug and play applications. But I don't really see how the token fits in, right? So what exactly are you governing if it's a decentralized stack where people click a couple buttons and just get their tailored money market, right? So I think that.
No, I completely agree. And this was part of the, disagreement I had with Haseeb about, his claim is that these are a roundabout way to talk about equity. And I just think that if that was indeed the case, that these wouldn't, they could all be still straight down if they just don't accrue sufficient revenue to justify their valuations. But I just don't think they trade the way they do. And I think that this goes back to your point. It's like when Bitcoin goes up, they go up. When Bitcoin goes down, they go down a lot more. And if a project, this is what I think about. Like there are, US, New York Stock Exchange goes up and it goes down. But if there's a company trading at, $1 billion, this is a hypothetical, right? And it makes $1 billion a year. Somebody will, this again, all hypothetical, but somebody will buy that company and pay themselves $1 billion. And the problem with a lot of these DeFi protocols, I don't think there's that same, there's not that same indication that these really represent equity, because if they did, they would be trading more in line with actual fundamentals instead of this kind of like speculative premium that you talk about. So I do tend to agree. I think what was your kind of experience in the liquid fund? Do you have any like interesting stories of, tokens and like thinking something kind of has like some fundamental value and then it just kind of going up with Bitcoin or going down with Bitcoin and you kind of came to the conclusion that this is a Bitcoin market?
Well, it's a funny question because when I was running the liquid fund, I actually applied sort of like a fundamental analysis for the most part. So that allowed us to, get good entries and good exits. We did a lot of RFV, which is risk-free value, right? So that's like the most fundamental you can get on tokens. So we actually did the ARB on time, for example, from Wonderland, right? So they had like this treasury and they were the token that owned the treasury was trading way below, right?
I know exactly. Sorry. Yeah. You're talking about sorry. I don't know if did you say ARCA? Like I know they did this stuff.
They also did this stuff. And it was very profitable. That's as fundamental as you can get, right? So you're buying a token that actually owns something tangible that can be sold for USD, BTC, or whatever. But I do agree with you in the sense that if there's a floor value on something as long as it's worth something, right? As it has a potential revenue generation. So, for example, let's talk about the Uni token for a second. The Uni has a potential physics, right? How much is that worth? In your podcast with Haseeb, he was arguing, okay, it's worth like $3 billion. That's the market. People are not stupid. They don't buy tokens if they are shit, right? But, people go to the casino all the time and they're doing bad decisions because they want to gamble and they do think they have an edge. They look at the roulette and say, no, I'm going to pick 17 because, 33 was before and then it's going to blah, blah, blah. So I do think that people are putting a speculative premium. There are a few protocols that actually generate money, right? So I think, for example, MakerDAO is a great example. They do have a revenue generation model. The protocol, it's owned, truly owned by MKR, by the token. Even if Rune holds most of it, it's still owned by the token, right? If you buy it, you get rights to all the profit. And there's a bunch of DAI that's lost. Right, so that's like captive money you can charge, whatever you want, interest or get the money wherever. That's protocol owned, basically.
Yeah, I was just going to ask, what do you think about Maker's kind of buyback model?
Yeah, I think buybacks are very interesting because I do think that a buyback only works if the company or management, DAO, whatever, thinks the project is undervalued. Right, so if it's undervalued, they can pump the price to whatever they think is fair. But if you market buy 100 million of MKR, it's going to go up and instantly go down, right? Because people will look at it and be like, yo, Maker shouldn't be worth like 10 billion because of the buyback. So we just sell MKR, get it back to fair value. I'm not a lawyer. I think that buybacks are meant to like elude some kind of securities law. I do think that dividends is the best way to go in terms of, revenue.
Yeah, I think another thing you were talking about, the Uni token there, I think Noah from this liquid fund I think he said the same fund as Felipe, he was talking about like what Uni would look like if they turn the fee switch on, and the multiple it's trading at, and it's trading at quite a bit higher multiple, from my understanding, than even Coinbase. And what's ironic about this to me is like I feel instinctively that open source, I guess Uniswap has business source or some type of like smallish moat, but it seems that protocols should actually trade at lower valuations than like something like a public company, right? Because again, what you were saying is they can be forked. And the other thing too is if they do turn the fee switch on, like this does certainly change the dynamics of LPing. And it's not clear to me that fee switch is necessarily like so. If they had already turned the fee switch on, like how does this change the dynamics of the LP composition? So I'm not sure. It just seems like it's very hard to. I think it's quite a stretch to look at. Okay, what if Uni turned the fee switch on and then the kind of multiple it's trading at relative to like Binance or Coinbase? It's like I think it should be even lower, but I don't know.
No, I agree. I think there's a bunch of execution risk that's native to crypto. These things can have a critical bug anytime. And then your equity token, whatever, it's worth zero, right? If there's a critical bug in Coinbase, it's probably still worth something, even if they steal all the BTC in Coinbase custody or whatever. So I do agree that the multiple should be lower if we're valuing them on the same terms. And the whole Uni fee switch is crazy because whenever I see models and valuations and whatever, they assume that LPs stay the same. That actually, if you charge a switch, if you charge a fee, it's paid by the trader, right?
Right.
So aggregators will just avoid Uniswap if it doesn't have the best price. So even if it can't be like copy pasted forked, it can be forked by the logic, and that's not really defendable in court or whatever.
Yeah, exactly. I wanted to come back to, you were talking about Athena had really good yields early on. What do you think of some of these sort of stable coins? Again, I don't know if that's exactly what they should be called, but some of these kind of structured instrument stable coins. Like, how do you think this plays out? And I mean, Athena seems like one of the better ideas of this cycle. Like, it's interesting, right? But how do you view these? And especially, coming from market neutral, like, do you view these as stable coins, or think there's like a lot of embedded risk that's sort of under discussed?
I think Athena has a great business model. I think that their BD is great. I think the team is incredibly competent. Guy is incredibly competent. I've always seen them as investment funds, right? So you just give us your money. We'll do whatever we want or we can to get you the best yield. If it's the basis trade, we'll do the basis trade. If it's T-bill, we'll buy T-bills. And if it's depositing on SDAI, we'll deposit on SDAI. So it's basically what we do, right? But on a custodial model. I think that calling them stablecoins is highly misleading. It shouldn't be done. I know that Athena launched calling it a stablecoin. It has some pushback and they changed it to, I don't think it's even synthetic dollar. I'm not sure what they're using right now, but they did address it. And I think that their documentation is incredibly transparent. The only thing missing is just the headline calling it an investment fund, right? So in that sense, I don't think they're bad. Like, investment funds can be good, but you need to be aware that you're getting into a fund, right? So I think Athena is very interesting because it allows you to compound and take on additional risk if you like. Like, I would love if there was a Lucidity token and you could go to Aave and just get leverage on it. So I think that's the product market fit rather than just a market neutral fund. There's a bunch of market neutral funds. They're like decentralized market neutral funds. That's not the edge. The edge is the composability, as we saw, with the Morpho pools, now on Aave, the PTs, whatever. So we're seeing a bunch of them right now as well, like doing crazy strategies. Like, we will buy OTC tokens and hedge it on perps. That's market neutral. Don't worry about it. It will be fine. As long as they don't call it stablecoins and they're transparent with, the risks, I'm okay with them.
Yeah, I agree. I think Athena team seems very, very sharp. I think Guy, when I talk to him, I think he really, he's quite level-headed. What do you think about the Athena token? That's another example of great product. And then I was talking to his team about this, right? Like, it's a great idea. And they were able to scale it, right? This was tried on Solana before. I forget what it was called, like UXD or something. But I think they were just using on-chain perps. And, Athena comes along, it's like, yo, we can tap the Binance API, right? It's like quite a good idea. So, and it's interesting because as cynical as I am sometimes, right, and critical, it's like, this is something that I do think is uniquely enabled by crypto in some capacity, right? But yeah, the token, I don't know. I really didn't dig in too much to it, but what it doesn't. I don't know how closely linked it is to Athena, the protocol. But were you farming it early on?
Yeah, we did farm it. Early on when I think yields were like at 39, 40% by selling PTs. So of course we were taking a bunch of risks, but the rates were so good that decentralization is all fine and dandy, but they're paying us 40% and the other guys are paying us like 50%. So we did farm it. I do think that the Athena token is kind of funny, right? There's a fee switch. I need to check on this, but there was a fee switch back in November that got approved and then never executed, right?
Yeah.
But just the concept of a fee switch is crazy because Athena, let's call it Labs, runs the whole operation and they're just going to send like 10% of yield to some, I don't know. It's crazy.
Yeah. And again, this kind of goes to my point about, look, I can't always describe exactly what the disconnect is, but there seems to be a disconnect because Athena, like the Athena token, like the Athena protocol is crushing it and it continues and it's maintained adoption. It has grown since their airdrop. And yet the token is sort of just gone straight down this year. And so this is like the point I often try to make is like there clearly is some disconnect there, right? And is it insider selling? Is it VCs? I'm not sure. Again, in the future, maybe this is like a killer, 100x. But Athena's growing and the token's not. Bitcoin's going up. Like to me, this is kind of one of these disconnects that, well, I can't articulate exactly why, but I'm just looking at the chart. You know what I mean?
Yeah, well, it's the same scenario as any startup, right? They get crazy expenses like Uber when they were trying to incentivize rides. If you look at the Athena, let's call it P&L, right? They're heavily underwater because they have so much issuance. They keep incentivizing people to deposit on Athena, and they're basically at T-bill rate, right? So it's T-bill rate plus incentives. It's very hard to run an investment fund and be profitable when you're at T-bill, right? Because then your competition is the United States government. So it's very hard to take a bite out of risk-free rate. Of course, in frothy market conditions, they might do all right and keep a lot of AUM. But yeah, they won't do well in a prolonged bear market. At least the token, right? The product, yes, it's a good product. The T-bill is the bitter wrapper, should be good. But yeah, not very bullish on Athena.
I also think I was going to mention this last podcast actually, and somebody was talking to me about this, but to me, there is a difference between Uber subsidizing rates and for an extended period of time versus printing a token out of thin air. Like that's real. In a scenario of Uber, there's real cash coming out of VC's pockets to get this growth stage, really underway. When you can incentivize with tokens, right? It does change the paradigm to some extent.
Well, I think it only changed who you dilute, right? So in one scenario, you're diluting the company's treasury, and on the other, you're diluting everybody that's buying the token. So that can be, it's a team that has the supply that they got at zero cost basis, or VCs that got in at, seed cost basis, or the retail investor that's buying in at 1.1, right? So someone is paying. The question is who?
Yeah, I think I would feel better about agreeing entirely with what you just said if the ENA token was actually legal equity. Like I would say, oh, they're actually giving legal equity, and versus, something that kind of has this nebulous like governance structure. I mean, even you said there was like a fee switch and they just didn't turn it on. It's like those are the types of things where I'm sitting here, I'm like, this doesn't really resemble equity. Okay, maybe in the future, and I understand there's regulatory pressure, but it is a bit different, surely. Like as opposed to ENA being listed on New York Stock Exchange and they're giving that out because it's a liquid public. Equity is a little bit different. But yeah, I agree directly. Sure. Yeah.
So when I was reading up on the fee switch, it was I found it very interesting because it was like, okay, Athena will calculate their revenue, right? Or their yield. and then they're gonna send 10% to the DAO. That's not enforceable, right? That's not crypto. That's just like a stablecoin transfer. So it's very hard to turn it into equity if it relies on the goodwill of people, right?
Yeah.
I guess that, public companies also relies on the goodwill of people, but they do have like a bunch of processes and regulation that basically sends people to jail if they don't comply. Enforcement is much more murky if it's a governance tokens and the DAO is in the company is like a Cayman Foundation or whatever.
Right. Yeah. Okay, let's be optimistic for a bit here. What excites you about DeFi? I mean, you've been in the space for quite a while now. You played around with all this stuff. You probably understand as well as anybody the value proposition. What gets you actually excited?
Yeah, I'm excited for Bitcoin. I think that Bitcoin is, setting the road for store of value. I think I'm also a big gold fan, so I own both gold and Bitcoin. I think the value proposition is the same. So Bitcoin has its flaws, gold has its flaws, and they both have their own pros. I'm very excited for Bitcoin, and I'm incredibly excited for the fact that it's actually taking its center stage as, money on the internet and true store of value. I think that's amazing. I'm incredibly excited for Ethereum, not the token, but the platform. I think that the tech is great. I think that it's moving in the right direction. I'm incredibly excited that the tech is so solid. Like rollups are very solid. The base now transition to L1. They're going to transition to L2. And I think that enabling a fairly decentralized, because it's fairly, right? It's not fully decentralized. Only Bitcoin is fully decentralized, in my opinion. But I think that's okay because you don't need to have a fully decentralized stack to run your,
centralized
LP
stablecoin.
share, centralized stablecoin or tokenized LP share or whatever you want, right? You need just a platform that can't be that easily broken, right? So I do think that that's very exciting. I don't know what will be built. I'm guessing from what I'm sensing from the timeline and just talking to people, it will be like centralized replicas, right? But it's still a tech improvement, right? When I log into my bank or brokerage account, it's very tedious. I would love it to be on an L2. And I think that's where we're going.
Do you do anything on Solana?
Just market neutral when it's good.
But you do use Solana?
Yeah.
Yeah. Are you bullish on Solana? It sounds like you seem, I guess I would have thought you would have mentioned Solana while talking about Ethereum platform. Are you bullish on the Solana platform or no?
Yeah, I think it's just, general computation blockchains. I'm just bullish on Ethereum because things are being built, but Monad, Mega Ethereum, Solana, that's just block space. And I think it's commoditized and they're all fairly decentralized, right?
Yeah. Decentralized
I'm not
enough.
an Ethereum maxi. Decentralized enough. Yeah, that's correct.
Is there anything that would ever, I'm talking in pure hypothetical here, but is there anything that would ever shift you toward being a directional fund, right? In the future, can you think of anything where you would start taking directional bets on tokens? Doesn't sound like you're hyper bullish on platforms. I understand why, but could you ever see yourself shifting into that? Or is this something that you view as like market neutral for the time being, can provide some extremely lucrative opportunities and maybe the alpha decays, but going forward, where do you see, let me rephrase this slightly differently. BlackRock and Goldman and JP Morgan are all on chain and battling with you for UniChain incentives, right? You're probably not going to have the money to swing around with these massive financial players that are apparently coming. Where do you see Lucidity in 5 to 10 years?
Yeah, that's a good question. And it's funny because just the other day I was thinking that every year I expect my alpha to decay, right? Yep. Because, I've been competed out of mainnet by Wintermute or whoever is harvesting these pools. Yeah. Then I just go to UniChain or I just go to Arbitrum or I do this and that on that exchange or whatever. So I do think that opportunities will keep arising. A lot of that, of why I keep getting alpha is because I've gotten better at what I do. Right. But I do think that there will be a lot of pockets to extract alpha on market neutral. There's also a scenario in which there's no alpha to extract on stablecoin, right? Rates are disadjusted across the board and it's not a good investment. I'm not a stablecoin maxi, as even if I seem that way. I'm very fluid in that sense. When I launched my liquid fund in 21, I didn't want to. right? But I look at my returns and was like, oh fuck, like these are good. I should do it.
Yeah.
So I think that just a general shift in my edge over the market. The market cannot change, but if I find an edge, I'll be happy to scale it up, right?
Yeah. It's also quite fascinating because I completely agree. Every time we think that the airdrop meta is over or yield farming's over, it's like you can always just launch new chains, right? And I mean, even Hyperliquid, right? It's been a good example, especially for retail traders, where it was like these people got absolutely insane airdrops, and it has incentivized people to stick around. And every time we think this whole thing is compressing, it's like somebody just puts some open source code out there and makes a ton of money. And so I tend to agree. But I guess the reason I asked is obviously like if these massive players do feel comfortable coming on chain, it seems like it will become increasingly difficult. I wanted to ask you, how do you identify these opportunities? Are you like, what tools are you using? And are you just like following the Twitter accounts? Like we're doing some incentive programs. Are you like what are good tools for people again if they wanted to kind of replicate some of the stuff you do?
Yeah, so I think the most important thing we do, we track wallets, right? So we have a bunch of very smart people and institutions, and we get alerts whenever they move money somewhere or someplace. I think that's, we're outsourcing our work because it's all on chain. And yes, they do take steps to obscure their, their addresses, but we do a very good job in keeping up with them. That's like the easiest and easiest part, right? Just scroll through the chain. Oh, this guy moved like 10 million in stablecoins. You can just add their wallet and see if they're making any sense in their transactions, and just keep it in your bookmarks and check it every few times. I also built a very good network of colleagues that do market neutral. Those are funny conversations because you want to chat and give alpha, but not too much. Right?
Yeah, exactly.
Because whenever there's a pool that's not big enough to support you and your colleagues, then it's kind of PvP. But if it's UniChain, it's PvE 100%. Like just throw it everywhere. It's all paid by the Uniswap DAO. So I do think those are the two key ways to get alpha. Just check the chain basically and chat with people. I'm always happy to chat. I chat with a lot of people about this stuff. But yeah, the tricky part is what comes after, right? Not getting wrecked.
Okay, I want to finish on one thing that you and I had talked about prior to this. Do you think so? You stopped running a liquid fund on the grounds. You were like, look, like we're just risk adjusted versus Bitcoin. It's just not a very good usage of my time. What do you think about VCs? Maybe VCs specifically in the next 5-10 years. I mean, are these guys outperforming Bitcoin net of fees in your opinion?
No. No, yeah. I don't think they will. I think Bitcoin is very hard to do. I do think that, like, I kind of agree in the sense that VC investing is different, right? Your job is to get into small seed rounds and get out at higher valuation. I do think that liquid tokens should be benchmarked against Bitcoins, but I don't think that a VC book should be valued against Bitcoin because it's a different ballgame, right? You're trading on hype. You're getting into Monad at 100 million.
Right. That's interesting. So liquid tokens, you think, should be benchmarked to BTC, but VCs, the aggregate portfolio should not. Is that basically what you're saying?
Yeah, I'm saying that, yeah.
Do you think it's fair to not... So, right, Haseeb's argument, which I understand, I have mixed feelings about it, but I think it's at least rational, is that, VCs now are not benchmarked to Bitcoin at all, but they have liquid tokens in their portfolio, right? So it's a little bit blended, where it's like, okay, are you benchmarking the illiquid stuff versus the liquid stuff? It makes it a bit complicated from my perspective. But what he was saying, is LPs come to us and we tell them, buy Bitcoin. There's ways to buy it now on, your brokerage account. There's very easy ways to access it and have it custodied. So they don't want that exposure anymore. And they come to us for, actual VC exposure. But it does kind of make it kind of screwy. And this was sort of my overarching point. It makes it screwy when there's a bunch of liquid tokens and they all go down versus Bitcoin,
Yeah, no, definitely. I mean, I think they're holding liquid tokens, just waiting for liquidity to sell. right? If they're actually holding liquid tokens because they're bullish on it, yeah, definitely you should benchmark them with Bitcoin. But if their whole business is getting early and cheap and selling as soon as they can, then no, I don't think it's fair to compare them to BTC.
Do you think those type of funds that, sort of the latter, can those funds outperform Bitcoin net of fees?
VCs?
Yeah, I mean, like VCs who are just purely holding until they can get liquidity as opposed to holding these liquid tokens for the long run. I mean, I guess what I'm saying is intuitively, if you get into a bunch of rounds at 10 to 50 million and they're all launching at 500 to a billion, you should outperform Bitcoin. But but sometimes even looking through these tokens, but I don't know all the valuations. Of course, I don't have all the inside information and I don't know the fees on their end, but I think even that looks kind of difficult. Especially over the length of a full fund, over the length of 7 years, like these tokens do not like typically trend upward against Bitcoin,
Yeah, no, definitely. Bitcoin's been on a crazy run since 2018, very hard to outperform. I do think that just VC investing is a call option on bull market conditions, right? Because if the market goes to shit, a VC will write all of their investments to zero. Not like the minus 25% we saw with BTC, like true bear market, like minus 70, minus 80% BTC, then you can write your book to zero. They are taking a lot of risk. I'm not sure how to quantify it because I'm not a VC. But yeah.
Yeah. I tend to agree. So then I would just ask one other question kind of along those lines. Do you think the kind of massive fund VC period that we've gone through, I don't know, you could say starting from ICOs, but let's call it like 2019, 2020. Like, do you think this meta is kind of over? I mean, are we going to see a lot less of this kind of high FTV, low float stuff? Or is this just going to carry on? Because it's kind of, I kind of liken this to what you were saying. Every time we all think, oh, like there's never going to be these massive airdrops anymore. Like there's never going to be a uni airdrop or a hyperliquid airdrop anymore. And then it just keeps happening. So at the same time, like, well, maybe this just keeps happening. Who knows?
Well, the human appetite for gambling is endless, right? It's an endless pit. People will gamble. They've been gambling for thousands of years. Ever since we managed to talk, we've gambled. So I do think that speculative premium will keep going. Crypto is very attractive right now for that. So maybe gambling, takes a detour and goes somewhere else and then goes back to crypto. But yeah, I think that people making money on crypto are just, raking in speculative premium, myself included, right? So I mainly sell leverage to traders that are taking very shitty decisions. So in that sense, we're all in the gambling industry.
Yeah, I completely agree. All right. Well, thank you so much. I thought it was fantastic. Very interesting. Again, never talked to somebody really who runs a fund the way you do. So I think it's very fascinating. Hopefully people learn something.
Yeah, thank you for having me.